Welcome to our USD/CHF Analysis Report, covering September 29th through October 4th, 2025. I'm your host from FX Tech, bringing you comprehensive insights into the Swiss franc's performance against the US dollar over the past week. In this analysis, we'll examine key technical levels, market dynamics, and trading recommendations to help you make informed decisions in the forex market. Let's dive into the data and discover what's driving this important currency pair. Before we begin our analysis, let's review our data sources. We've gathered information from 5 leading financial platforms: TradingView for price data and technical indicators, Investing Live for expert market commentary, ActionForex for weekly market outlooks, forex.com for fundamental analysis, and DailyForex for daily technical signals. By combining these diverse perspectives, we can provide you with a well-rounded view of the USD/CHF pair's current position and future potential. Let's examine the current price information for USD/CHF. As of October 4th, the pair is trading at 0.79522, showing a daily decline of 0.33%. The day's trading range was between 0.79470 and 0.79834. Looking at the broader performance, we can see consistent weakness across multiple timeframes, with a 0.37% decline over the past week, a 1.05% drop over the past month, and a significant 12.28% fall year-to-date. This persistent downtrend suggests continued bearish pressure on the pair. According to Greg Michalowski from Investing Live, USD/CHF is correcting lower after a sharp upside surge. The pair has fallen below a critical swing area between 0.7986 and 0.7994, shifting the near-term tone. Sellers are now focusing on the 61.8% Fibonacci retracement level at 0.79784. A break below this level could accelerate downside momentum. However, sellers still need to maintain pressure to firmly establish control of the market direction. The battle between buyers and sellers continues at these key technical levels. ActionForex's weekly outlook indicates that USD/CHF remained in range trading below 0.8013 last week, with a neutral initial bias for this week. They identify 2 key scenarios. If the pair sustains trading above the 55-day EMA at 0.8008, it suggests a potential correction of the fall from 0.9200, targeting 0.8170. Conversely, a break below 0.7908 would signal a bearish continuation toward the recent low of 0.7828. Long-term, the downtrend from the 2017 high remains intact, with a potential target at 0.7382. Christopher Lewis from DailyForex notes that USD/CHF initially fell on Thursday, but found support at a previous downtrend line, showing a potential breakout. The critical 0.80 level represents a significant psychological ceiling, reinforced by the 50-day EMA. A break above 0.80 could target 0.81, while breaking above 0.81 would signal a significant trend change. Conversely, a drop below 0.79 would be bearish, potentially leading to further declines. The short-term bias is neutral to slightly bullish, while the long-term outlook remains bearish. Let's examine the critical technical levels for USD/CHF. Resistance levels include 0.8000, a strong psychological barrier reinforced by the 50-day EMA, 0.8013, where recent upward momentum stalled, 0.8008, the 55-day EMA critical for trend change, and 0.8170, a major resistance target. Support levels include the 0.7986 to 94 swing area, 0.7978, the 61.8% Fibonacci retracement, 0.7908, a key support identified by ActionForex, and 0.7828, the recent bottom. Breaking above 0.8008 could signal a trend change, while falling below 0.7908 would confirm bearish continuation. For short-term traders, we have two potential strategies. The short strategy involves entering at 0.8000 to 0.8013, targeting 0.7910 to 0.7930, with a stop loss at 0.8050, offering a favorable 1-to-2 risk-reward ratio. The long strategy requires a confirmed break above 0.8020 and the 55-day EMA, targeting 0.8100 to 0.8150, with a stop loss at 0.7980. For medium-term outlook, we see a 60% probability of a bearish scenario targeting 0.7800 to 0.7900, driven by global economic uncertainty and potential USD weakness. The alternative bullish scenario has a 40% probability, targeting 0.8100 to 0.8200. Several risk factors could impact our USD/CHF outlook. Upside risks include a surprise hawkish shift from the Fed, easing geopolitical tensions, reducing safe haven demand for CHF, and stronger U.S. economic data. Downside risks include U.S. government shutdown concerns, escalating global trade conflicts, and potential SNB intervention. For successful trading, we recommend strict stop losses limited to 2% of account value, careful position sizing based on volatility, and vigilant monitoring of central bank announcements. In conclusion, while USD/CHF remains in a long-term downtrend, the 0.8000 level will be the key battleground in the coming weeks.